Good evening. Today is February 24th, and the power rally, or shall I say the Powell rally, continued today pretty much since the open as the Fed chair started speaking. He reiterated his point of easy money for a long time. And as Victor predicted, yesterday 3900 level was easily broken, and we closed at the high of the day of 3926 after rallying 70 points since the low today. Russell was the winner today, being up over 2.68%, and it's just a few points off of all-time highs. Tesla rallied 6% today as Elon Musk was back on Twitter promoting his favorite Dogecoin again. And GME stock, GameStop stock, is back in the news as it has rallied over 100% today, basically on no news, and was up after hours even more. It rallied today from $50 to $90, and last I checked, it was $200 after hours. We talked about the exuberance of SPACs, special purpose acquisition companies, and one example of them, the Churchill Capital, was sold for a second consecutive day and was down 20% after yesterday's 38. And even Charlie Munger, the vice chairman of Berkshire Hathaway, said today that popularity of SPACs reflects crazy speculation and could signal an irritating bubble. He calls SPACs as means for investment banks to sell shares that shouldn't be sold. He also warned that the momentum-driven trading frenzy by amateur investors on commission-free trading platforms like Robinhood will not end well. And interesting quote from him on culture. And it's really stupid to have a culture which encourages as much gambling in stocks by people who have the mindset of racetrack bettors. It's a dirty way of making money. Munger even compared the current trading frenzy to the historic South Sea bubble in 1720, and he said that after that, England didn't allow hardly any public trading in securities and any companies for decades thereafter. I don't think Wall Street crowd bets will be super happy hearing that. A 97 years old super rich man is telling them that trading is not for them and it's a dirty way of making money. Yeah, a little out of touch there, but okay. He also talked about Bitcoin. He said that I don't think Bitcoin is going to end up the medium of exchange for the world. It's too volatile to serve well as medium as exchange. And it's really the kind of artificial substitute for gold. And since I never buy any gold, I never buy any Bitcoin. He said, and again, quote, he used quote from Oscar Wilde and said that Bitcoin reminds him of fox hunting. It's the pursuit of an edible by the unspeakable. And somebody asked him about Tesla and Bitcoin market cap, and Munger again said that he doesn't know which is worse. So he doesn't like Bitcoin, he doesn't like Tesla, he doesn't like Robinhood traders. And on the other hand, Michael Saylor, whose company already owns a few billion of Bitcoin, worth of Bitcoin, said that Bitcoin is not for spending. He said in a quote, if you were to save your money for the next decade, it's logical to do one transaction, put all your money in Bitcoin and wait for a decade and wait for it to go up. I'm not sure I agree with putting all your money in Bitcoin, but his stock, MSTR, was down over 18% today. So that's all that counts for him. And finally, oil was up almost 3% today, as well as other commodities were up, except for gold, of course, because now we only care about digital gold, Bitcoin, which was trading the whole day around the SOJI 50 level, up and down. And of course, bonds made a new low again as Powell finally admitted that some asset prices appear elevated. Victor, what do you have for us today?
What I have is the frog jumping out of the hot water. We jumped into hot water at the beginning of the day. S&P moved down to 3850. Is down 1% on the day. bonds were at the 160 level, and things couldn't have looked worse. We've been 7 days in a row down. Exactly. That's when you have to buy it. So we finally had a good day after 6 down days and after bonds were at a unsustainable level. So that's how the market goes. Tries to scare you out with disruptive, startling, aggressive behavior as the pufferfish, as the rattlesnake. Let's not worry about what Charlie Munger says. In other words, he's a surrogate for the sage. In fact, in his book on the market, he was kind enough to have a chapter about me to offering the market. Everything that Buffett and Munger says is unhelpful. They're old lions trying to fight off the new ones. They're completely out of touch with the current market. They can't fly their tax gimmicks any further. They're lagging behind. Again, the Nikkei was the key, went down to 28,000 today, and then like magic hit the 30,000 level that all the non-surrendering Japan has been waiting for, and then they followed the crowd and they jumped on it so that it closed at 30,100. So we had a lot of round numbers broken. It was a constructive day. We know that the market has a gravitational traction to the constructive numbers. They were definitely in play today. The S&P 3,900, we missed it for 7 days in a row, and it got up to within one or two ticks from it a few days in a row, and then bounced back 1.5% down to the 3850 level. So there were a lot of stops there, and as said in lesson for the day is the round numbers never a penumbra. When it goes past the round numbers, it tends to continue. You bought every stock that was above 100 as it crossed 100. You bought every stock that crossed 10 in the old days. You'd be a wealthy man. Well, Dr. Castaldo, who has been my most loyal partner for 15 years, just came back from Italy. And I listened to and I played that snippet of Verdi watching a rehearsal. It's the only rehearsal that they ever reported. And the way he takes a proactive plan to every note he runs. Can you imagine him running up to the sopranos, running up to the cellos, berating them? And I like Jordan's life is the kind of life that a trader should have. Certainly a trading manager. Bertie was a very successful investor, and he was by far the most famous person in all of Europe at the time. Very unfairly compared to Wagner. They tried to belittle Italian opera, saying it was the old the old way of doing things. And Wagner was Wagner was the new way with his motifs, tying together of all the music. There's nothing like Verdi. He had his pulse on the emotions. He would have been a very good market trader. He was he was the largest landholder in all of Italy. And his one failing was that if you said something about his music, he'd love it. You know, he'd say, "Oh yeah, whatever you say." But if you said anything about his pump and his agricultural efforts, he would insist upon that he had to do it himself. And he spent 90% of his time taking care of his agricultural interests, digging. He was a horrible husband. Constantly, it was almost impossible to live with him. He was very acerbic. He didn't take any criticism. They were at a rehearsal, and Verdi said, "It doesn't seem like you were really interested in that." And they said, "Well, the situation, the real thing is that we have something else to do." Verdi said, "You have something else to do?" He said, "Yes, we do." He said, "Okay, goodbye." He never came back. He would write he became extremely wealthy with Aida because the Egyptians had just completed the Suez Canal, and they said, "Whatever, please write an opera for us." And he named a price that was like 5 times as much as anyone had ever. I would strongly recommend that people listen to Verdi as the market soars to new highs. It's now been 7 days without it setting a 20-day high. And you know that in the last year and a quarter, 30% of all the days have been new highs. By the end of the week, we should have a new high again, new all-time high. Right now, after all this pessimism, we had we're only a 0.5%, 0.75% away from all-time high. The Dow is at a new high. And Chance Gardner, the most amazing thing about today is that the bonds almost made their way back. They were only down a point. They were down 2 points at one time, but apparently the, the Chance Gardner kind of approach to the market where he doesn't know anything about monetary theory, and as long as as long as there's more stimulus, all the businesses that are locked down with money, their money can only last for so long. I mean, if a business has lost a lot of money, you can only give it to them once. They're still what their activity is gone. But yet, by his saying that he's going to continue to quantitative ease, continue to keep interest rates down, continue to bail out the businesses. And of course, part of this is in the new stimulus bill. There's so many progressive things. Earmarks are back. Pork is, is back. Special money for the disadvantaged. The unions is there. And so you have to be careful. Remember that the more woke the market is, the more woke the background is, the better it is for stocks. And that's what happened. We finally had a 100% woke day. The apotheosis was wokeity running the open market committee running the Fed at the open today when the market was at 38.50. I said that they would have to interrupt. They have grand lunches and breakfast at the Fed where all the old Fed chairman attend. So Bernanke is there, and Janet Yellen is there, and Jay Powell is there. So they all got together, and he said his thing that he's going to keep interest rates low. And strangely, the bonds they almost got back to, they're only down a point on the day. We'll be there again. We haven't ended the precipitous decline. We've had probably 7 out of the last 8 days have been new 11 months, 12 month lows in bonds. And of course, my email was overwhelmed today by people saying, "Ha, finally, the interest rates are, are going to overwhelm the stock market. Are you going to give up on your all-time high views?" But again, the other main principle you should remember today is, have you tested that? Remember what we said yesterday? The most bullish days for the stock market in terms of our colors are the red days, when both bonds and stocks are down. And it was very bullish today when the bonds were down. And everybody was on the wrong foot. They were on the wrong foot, and the market just kept going up. First the Nikkei, of course, the constructor number, and the S&P did it. That's all I have to say.